and on Wednesday, I was joined by Iowa State University livestock economist Dr. Schulz. It's a tale of two meats when it comes to beef and pork exports, we'll explain. And as we head into the final stretch of 2019, Lee tells us what we need to be watching. But we began by talking about the recently released cattle on feed report and the decrease in cattle inventory.
There's a few takeaways really from that number. This is actually the second consecutive year-over-year decline. And so we potentially could see the cyclical peak here in feedlot inventories. I think the next couple of months will tell us, if we've seen that or if we do see a ramp up in placements and larger cattle on feed numbers. Real takeaway I seen from the inventory estimates was that when you look by individual states, Nebraska was down 7%, Iowa was down 7%, Minnesota down 19%, South Dakota down 2%. I think that's maybe an indication here we've had an issue with harvest being a delayed harvest, and that's having somewhat of an impact on placements and such inventories in our feedlots.
Yeah, because when you're looking at placements, 2% increase breaks the 4-month streak of year-over-year declines. Any more info you want to mention on that?
Typically, we do see the peak in placements in October, with September being a significant ramp up there. Placements were really kind of in the middle weight categories. We've seen a few less placements year over year in the large weight categories, which should be supportive of prices short term. And then in the lightest weight, 600 pounds and less, we did see a slight decline. The only state being up was Texas, and I think that's maybe a bit of an indication with the drought conditions there. We've seen a few more calves move to market, but overall I think there hasn't been a lot of pressure for cow-calf producers to move calves as we've had good forage conditions and strengthening prices.
Do you think we've fully recovered from the Tyson beef plant fire back in August?
It's very difficult, I think, given that we've seen several weeks and even months now post that event to really understand how much of that event is impacting markets now. We're seeing our markets being driven by much more fundamentals. We certainly seen prices rebound, but prior to that event, prices were expected to increase as we looked at the futures market. So I think overall, I think the market is suggesting that we're pretty current in supplies, and beef demand is strong.
When we look at beef exports, are we still seeing that overall decline?
We are, and you're seeing it really twofold. You're seeing it in the tonnage number, so the quantity decline, but also you're seeing a price decline too. So looking at it, we've needed lower prices to even move a lower percentage of beef. Now, importantly, we've really seen double-digit increase the last couple of years, and so I think it wasn't really sustainable to really maintain those levels, but overall we have seen lower export numbers this year, and I think that's certainly impacting prices.
What do you think we need to do to get those export numbers back where they need to be?
Well, it certainly relates to the trade agreements that we have in place or currently negotiating or have been approved. We're seeing really recent growth in the Japan market as we got that agreement in principle made. I think we have the potential to grow exports to Mexico and Canada more as we talk about the USMCA. I think really when you look at forecasts, this year may kind of be a little bit of an outlier as we're looking at forecast larger exports in 2020.
And then when we look at pork exports, really a different story. They look pretty good, don't they?
They do, but there is a little bit of disconnect, I think, between the data that you look at. The official census data, which we have through August, shows that exports are up about 5%. When you look at the weekly data, which we have that through October 17th, that shows exports are up about 36%. The disconnect being there is that weekly data is supposed to kind of give us a little bit of a look ahead. And USDA FAS came back and said they had missed some sales that were made primarily to China, Mexico, and Japan. And so that really is showing much larger exports than the monthly data shows. We won't be able to rectify those data really for the next couple of months. But overall, I think that shows very optimism, not only for China, as we've talked a lot about this year, but also the growth we've seen in Japan and Mexico.
So with all that being said, what does that mean for hog prices here in the U.S.? Because There has been lots of growth in that pork industry. What would you like to tell producers?
You really have to look at the demand situation of where we are at production relative to prices. So we're at record production levels. You're seeing growth probably about 4.7% in slaughter this year for hog slaughter, and we're seeing about $5 higher prices compared to 2018. You can fast forward and forecasts are about $10 higher prices in 2020 with an additional increase in production.
And finally, Lee, as we wrap up, give us an idea on some things we'll want to pay attention to as we get into the first quarter of next year, and that can be for beef or pork or both.
Cattle feeding industry, I think you certainly have to focus in on the margins that are being offered really for the first 6 months of the year. It's almost a replay of last year. When you stared at the first 4 months of 2019, you could really hedge a profit of about $30 per head for the average feedlot producer in 2019. Now, when I look at futures prices for 2020, it's suggesting for the first half of the year, you can hedge about an $80 profit, and overall for the year, about a $20 profit. We haven't seen many years that have been in the black in cattle feeding, especially here in the last couple of years. The markets are really offering an opportunity to offset a lot of risk. Same could be said for the hog market, as we're looking at a premium prices in 2020 compared to 2019.